The family that vacations together stays together. At least, that was the plan. Except now, the Dastardly desk clerk is saying he can't confirm your connecting rooms.
Wait, what?
That's right, ma'am. You have rooms 201 and 709.
No, we cannot be 5 floors away from our kids.
The doors have double locks. They'll be fine.
When you want connecting rooms confirmed before you arrive, it matters where you stay.
Welcome to Hilton. I see your connecting rooms are already confirmed.
Hilton, for the stay.
Hi, this is Stephen Rothberg. I am the founder of College Recruiter Job Search Site, where we believe that every student and recent graduate deserves a great career and that it should be easy and inexpensive for employers to hire them. Welcome to episode 105 of the Inside Job Boards and Recruitment Marketplaces podcast. Peter is unavailable this week, as well as 2 weeks from now. I don't know if it was something I said, didn't say, didn't send him his allowance, whatever it might have been. But he'll be back with us in about a month. I am joined here today by Georgios Makarkas of Venero Capital Advisors, and we're going to talk money. We're going to talk about mergers, acquisitions, investments. I think some of the conversation will be work tech in general, any kind of like human resource technology, but we're going to be focusing mostly on the job board and recruitment marketplace segment of that. Georgios, welcome. Thanks. Before we get into the meat of the conversation, maybe you can tell the viewers and the listeners a little bit about, your background, what Venero is, et cetera, so they have some context.
Sure. So Venero, we are a work tech focused M&A advisor. We're the number one ranked in the space. We've done more deals in the space than anybody. And I'm managing partner at the firm. I've been with the firm now for about 8 years. Before that, I was at Deutsche Bank and Morgan Stanley doing M&A across a number of sectors and focusing on HR tech and work tech now for the last 5 years or so.
Okay, awesome. And Venero, is it on the sell side? Are you representing organizations that are trying to sell their businesses, or on the buy side? Do you do both?
Yeah, primarily on the sell side. So
Okay.
we work with companies across geographies, so very international footprint. So from North America, Latin America, Europe, Australia, Southeast Asia, so very global. Companies that have typically anywhere from 5 to 50 million in revenues,
Okay.
and across the segments. Primarily sell side. We also do debt financing advisory and equity financing advisory.
So for the viewers who have never been part of that process, maybe it's a founder-led company or a recruitment marketplace that, maybe they've been around for 10 years. They've never considered going to market to potentially sell. Walk me through what that normally looks like. How do they decide, is this the right time? Should we be retaining an advisor? Whether it's Venero or somebody else. Let's kind of because I think that probably there are some viewers out there right now that are thinking like, I wonder if we should be selling.
Yeah, no, that's a great question. And we get these questions all the time. So the way I like to position this is I like to say timing is everything when it comes to M&A, right? And there's 2 types of timing. There's internal company timing. So where is the company on its journey? Revenue wise, is it where you want it to be? Profit wise, size. That's internal timing. Is my company ready? And then there's external timing. How are the markets doing? Are the markets doing well? And is this kind of a good time to be selling or not a great time to be selling? So those are the things that we try to explore with clients who are trying to assess whether it come to market. So we go through and we say, okay, well, tell me about your KPIs. Where are you in your journey? What are the strengths and weaknesses of the business? We assess those. And then we share some insights on the market. How's the market doing? Just to give you an example, how important timing is, right? Just think of COVID, right? If you were to sell, 6 months before COVID versus 6 months after COVID,
Oh, yeah.
completely different. So market timing is crucial.
It's interesting because I can definitely see some scenarios just like you painted, where the business might be in the perfect place, but the market is just awful, or vice versa, right? Like coming out of COVID, I'm thinking like 2021. There was so much investment money coming into our space,
Yeah.
but if your product just wasn't ready or you had some major structural problems in your business, then I would think if an organization like that came to you, you'd probably be counseling them. My words, not yours. Get your shit together. Let's talk again in 6 months.
Yeah. Maybe, maybe not. Stephen, I can tell you, it's not, both timings don't need to be perfect.
Okay.
It's more about the narrative. You need to assess pros and cons of a lot of factors. So let's take today, for example. We are coming out of at least 2 years, if not long, probably 2 years that have been very difficult for recruitment.
Yes.
And yet everybody knows this. And yet people come to us and say, look, our KPIs historically for the last 2 years have not been great. Should I be coming to market? So sometimes the answer can still be yes, right? Sometimes, the answer would be no. It's very situation specific.
Interesting. You talked a little bit earlier about sort of like your ideal client. And I think if I remember correctly, you said between $5 and $50 million in revenue. There was a word that you used, and I think maybe it was primarily or mostly. I got the feeling like that's a general rule, but there are exceptions to that.
Yeah.
So talk with me a little bit about those exceptions. I'm not trying to have like a whole bunch of people come to you and say, can you help me? I've got $12 in revenue and no good product. Like we're not talking that much of an exception, I don't think. But if somebody's got, for example, some really fantastic technology, but very little revenue, is that an organization that should still be talking to you if they think like we should get some investment, we should be looking to sell?
The youngest company that we've worked with that I can remember is a company that had less than a year, that it was funded less than a year ago.
Wow.
And it was a fantastic company. We took them to market and they received an amazing offer, like fantastic offer. So it's not necessarily about the revenue of the business. So there are exceptions, like you said. It's more about how do we believe it will be perceived by potential buyers, right? Because it can be a small company, but you may be tackling a problem that's very specific, that we've been approached by buyers saying, hey, look, I'm looking for something like this. This is a big pain point for me. And then if we feel comfortable that we can bring this to market and can get a good reception from buyers, then definitely, we work with those companies. And I'll tell you the other thing, M&A, it's a lot of times it's about who is on the other side of the table. Like who is the buyer that you have reached out to? How motivated is that party? How strong of a conviction do they have about the type of product or service that you are offering? And if you have a highly motivated buyer, right, somebody who says, this is a gap in my offering that I want to fill, that party will be able to pay much more than most other buyers out there. So even if you're a small business, if you talk to the right party that has a specific need, then and we are aware of that, then we'll happily take you on. Right? And the last thing I'll say is a lot of times we get approached by buyers because we have such high deal flow and we see so much in the space that they'll come to us and say, look, Georgios or Venero, this is what we're looking for. If you see anything like this, let us know. So sometimes, even if a company is quite young or they don't want to do a full process, we can sometimes just arrange bilateral conversations with parties that have expressed specific interests. And, we can even, make deals happen that way.
Hey, this is William Tinka. Listen, we did a series for iSolved called Heroes of HR, where we talk to HR practitioners. And these are just your run-of-the-mill, everyday, slogging it out, 300 employees in Cedar Rapids, HR pros. Mostly it's centered around iSolved and what they do with iSolved, but also they talk a lot about kind of the day-to-day rigor of HR. If you're curious about that, search for Heroes of HR wherever you get your podcasts. Thank you.
Interesting. Yeah, that makes sense. So if a potential buyer comes to Venero, let us know if you're representing now or 9 months from now a company that does X, Y, or Z, or for our overseas viewers, Z. then let us know. So you're not representing those
No.
buyers, but it's kind of like if you're looking to buy a house, right? And you go and you walk into an open house and there's a realtor there and you're talking to him or her and it's like, well, this is a nice house, but it's not for us because it has 3 bedrooms and we really want a house with 2 bedrooms, or something along those lines. Do you have anything else? Or let me know if you're aware of a house like that that comes on the market. One of the things that came out recently, I think it was roughly a month ago, George Larocque, who I've known for a long time, was on the board of advisors for College Recruiter for a couple years, and he runs a company called WorkTech. They do a lot of research and following deals. What's the investment money? What's the merger and acquisition, M&A activity, et cetera. He published a YouTube video, and I think there was also a blog article about Q1 2025 activity and in our space, WorkTech in general. And what it showed was that the amount of investment into our space and the M&A activity in Q1 2025 was far higher than it had been in 2024 and I think also 2023. Are you seeing the same thing? Does that line up with what you're seeing, Georgios?
Yeah. So, obviously, I know George is doing amazing work, super smart guy.
Yeah.
So Q1, we track the space as well. We track WorkTech as a superset of HR tech. We have seen an uptick in investment volume. I think it was about 2.7 billion total across WorkTech. And of that, HR tech was about 1.6 as a subset of WorkTech. Yeah, it's been a strong quarter. The way we track the data, it wasn't necessarily a blowout quarter, but it was a better quarter than the previous quarter. In terms of deal volume, again, we saw an improvement, an uptick. We tracked about 165 deals across WorkTech and 125 just within HR Tech in Q1, which again was an improvement. It wasn't a blowout as far as we could tell, but it was an improvement quarter on quarter for sure.
Okay, cool. And I think we've got time for one more question. And so I always hear this from business owners. Whether or not I'm interested in selling my business is largely going to be driven by how much money I would get for my business, right?
Right.
Which then begs the question, how do you value a business? And what I've heard from people like you who know way more about this than me is how much your business is worth depends upon how much the buyer is willing to pay, right? But you don't know that until the end of the process. So at the beginning of the process, it seems like business owners like me, we're going to be looking at, okay, give me an approximation. Give me like a general idea, which I think leads us into a discussion about multiples. How many,
Yeah.
If your revenues are $1 million or 10 million or 50 million, or your gross
Yeah.
profit is X, Y, or Z/Z, when you're having that very initial, what's the ballpark value of this like job board recruitment marketplace right now, Q2 2025? Maybe you can like give us like a rough idea. Again, for listeners and viewers, this is not a valuation of your business. This is like a starting point. This is like a small piece of that puzzle, right? But just
Yeah, exactly.
rough idea. What are we talking about at this point?
Yeah, fair question. So I will start by giving you some ranges just to get that out of the door.
Perfect.
So job boards are typically valued in M&A as a percent of revenue. Let's set profits aside because it could be valued on EBITDA as well.
Okay.
But if you look at revenues, anywhere from 0.5 to around 4 times revenue, typically.
Okay.
There's exceptions.
Big range.
It's a wide range, but someone like Seek trades for a much higher multiple, for example, for its own specific reasons. Others, but typically you would see that range, and 2 times, 3 times can be average.
Okay.
Having said that, it depends a lot on the growth rate of the company. That's a key valuation driver. So how quickly is the company growing? What's the outlook of the business, right? Does it have a moat? We're talking about a job board or a marketplace. Does it have a differentiation, especially vis-a-vis the large the Indeeds of the world or the LinkedIn's of the world. How large is the company, right? And what geography is it in? The audience, what geography is that audience in? So a lot of factors come into play, but largely speaking, those are kind of the multiples to explain.
Cool. Well, Georgios, thank you so much. So if there's a job board recruitment marketplace that's like thinking about going to market and selling, they should call you at home at 2 a.m. and have you write them a check for 4 times their revenues. Pleasure talking with you. Thank you for sharing some of your insights. This has been really informative.
Yeah, pleasure, Stephen. Anytime.
Cheers.